Maybe before coming to that, first of all, 2024 was for us a very strong year. We had sales of 21.6 billion. We raised our profits, operating profits by 20%. Earnings per share were up by 25%. And we have a free cash flow of roughly 2.5 billion in the year. So I would say that's quite good results. And we're also proposing a 10% increase of our dividends for the year. That's where the year was, and I think full in line with our strategy. Already 23 was a great year. 24 continued on that. So strategy is working. Nevertheless, you're right. We see since the end of last year, beginning of this year, quite significant changes in terms of industrial and consumer demands, more softening. And that's also how we started the year. That nevertheless, we have given a guidance, an outlook for the year, which shows for Henkel, again, growth in top line and in bottom line. And that's also for both divisions. But yes, the consumer sentiment, especially also in the US, is softer than it was the year before and what we also expected.
And what is behind the softness in the US, and what are you expecting in terms of volume progression versus pricing for North America this year?
Yeah, I think behind is the insecurity, the volatility, which you see, the news flow since the beginning of the year. You have daily news of tariff discussions, of consumer sentiment discussions, which are for sure impacting the demand with consumers and customers, especially in the US. And I think that's something which is impacting then also the way of how consumers trade and how consumers buy. The good thing is, from my point of view, we have different offerings in terms of different price points when it comes to our consumer businesses. And I think that's the positive. And that's why I'm still with the point that we have a weaker start, especially in our consumer business, with a negative start in Q1, that we hope and have very clear points that we have a positive year also in terms of sales and profits.
You've got a line here around the prices for direct materials, expecting an increase in the low to mid-single-digit % range. We've got a market that is toying with recession or stagflation. Both scenarios now are increased in probability. Any sense that you're going to get more inflation in your prices thanks to tariffs?
Now, in general, the topic of tariffs is not a good one for consumers, because we have heard it also before in your news. If you have countries starting with tariffs, there will be countermeasures by other countries. And the consequence out of that is there is not a win-win situation. The consumer or the customer is losing on that. And in that context, there is a probability that inflation will go up. On the other side, Karen, I've seen over the last couple of years inflation quite significantly. And in that context, I think that in 2025, this topic will be manageable.
We've been discussing some very strong consumer trends in recent months. Some of your rivals talking about trading down to cheaper rivals, even in home markets. Latin America was an interesting one where local competition really took the challenge to very strong international brands, enough so that the likes of Unilever, for instance, has gone down the pathway of using social media influencers trying to carry some weight. What are you seeing in terms of rolling over on that sentiment where there is trading down in categories? And what do you think about social media as a way to rescue brands?
Yeah, I think that has changed significantly in the last couple of years, that influencers play an important role in parts of the segments, especially in more beauty-oriented segments, hair care, where you have a lot of influencers who are supporting brands. And I think the answer for me is always that you have a good balance as an international company between global brands on the one side, but also local jewels. And I think we have here a good combination on that. And with that, I think we will find answers and give answers to the consumers.